What's up YouTube, it's your boy ISFx Sphiwe, and guys, I'm about to record a video. I'll see you on that video. So this is just a beginning, this is a small intro nyana, and I just want to say I've reached 500 subscribers, so thank you guys for watching.
Stop the cap. Stop the cap right now. Stop the cap.
And if you haven't subscribed, please subscribe, tap in with us, and welcome to the family. So I'll see you all in the video. Shout out. Alright, bad guys, so we're going to start the video by describing what was happening this week, the trade that I took and the results of it and stuff like that. So this is a small update nyana, and if you haven't watched the previous video, well, I will suggest it on top. You can click on it and then watch that video before this one, because of this one actually it's a continuation of the last one. So guys, yeah guys, it was a trading week. It was a trading week. Hey.
Hi.
Okay.
It was a trading week. So the first thing that happened on that week is that I took some trade, guys. I took some trade Monday, Tuesday, Wednesday, and Thursday. And the results, guys, are guys. I took losses, guys. I took some L's this week. I took some L's. So as a result of these L's, guys, as a result of those L's, the 5,500 account is at 4,851. That means I lost around 149 US dollars on it, and then the 10,000 US dollars account is on the 9,781, which means I had a 219 dollars drawdown. So yeah, it was heavy. It was a heavy week, guys. I was not good, but now I'm good and stuff like that. But everything, anyways, you know, there are always lessons. So today, guys, I'm going to be reflecting. I'm going to be yapping a lot. I'm going to be talking to you guys what are my mistakes, and then also will show you guys where I've adjusted and the steps at which I will be trading. I will be taking trades henceforth. So you want to stick to the video until that part where I show you the steps which are critical, I believe, for your success and my success, guys, as we grow together, remember. So okay, yeah, so let's get to the first parts of that of those steps. So basically, before I get to that step, so let me describe what happened. Why did I take loss, right? So what I did is that, guys, I analyzed the market using the ICT, using some ICT strategy in the SMC, right? So what I did when I was analyzing I actually saw a change of character in there, a change of character, or something that I thought that was a change of character, right? Something like that, but actually it wasn't really. Because I thought the market was now going to start trending towards the downside, yet on the higher time frame it was actually just a correction towards to prepare to go towards the upside. So as a result thereof, my bias for the week was a sell bias until Wednesday, where I realized what did I do wrong. So because of my bias was a sell bias, right? So what I would do is that I would expect the market to for example, reject off order blocks towards the upside, right? But the market wasn't doing that, so I was wondering until I actually included or incorporated the trend. So what I did, I actually just because of I've also learned with the FS codes. Shout out to the FS codes for their trend lines and stuff like that. So I actually, you know what, I actually went to the trend lines and actually analyzed using the trend lines, and I saw that, oh, actually that what I thought was change of character, it was just a market correcting towards the downside, preparing towards to go to the upside, right? So yeah, I may show you guys what happened, but yeah, so here are the results. In fact, here are the results. As you can see, I just took some L's, guys. I just took some L's. So yeah, so those are the lessons, but now let's get to the serious business, right? So the serious business is that this is the updated trading strategy, right? So from now henceforth, guys, I will be combining the ICT plus trend. So basically, you know that ICT doesn't really like trends and stuff like that, and so I found a sort of a sweet spot of how to use both of them and then get good results. So what's that sweet spot is that I use trend lines not to trade the trend lines. I use trend lines just to get the direction of the market, not the bias. I use the daily bias to get what's the bias of today, but the trend gives me a perspective on the higher time frame where the market is actually heading, right? And then ICT is where I will be filtering all my entries and stuff like that. So I will be describing what do I do there. And then the second thing is that I will trade with the days likely bias. That means I'll be analyzing on the bias. And the third thing is that I will reduce the lots and increase the pips. That means a wider stop loss as a safety net. So what does that mean is that, guys, I've noticed that I usually like to put, due to that ICT things, I like to put my stop loss a bit tighter, because of I just put it just below the fair value gap of the lowest time frame that I usually trade with, which is not good. Sometimes the market will go in my direction but will actually hit my stop loss. So as a result, I've decided, why not, instead of me putting a tighter stop loss, just to decrease the lot size when I see the potential that the market can reverse onto some certain areas below when I'm buying. And then also I will increase the lot size if there is a room for a tighter stop loss, of course. So that's what I will do. That will actually increase my win rate. Yes. So number 4 is that the entries at earliest FEG after a major OP are allowed. So this is what I will break down. So also the number 5 is that I've actually been trading gold alone for the previous few months, two months, but actually before that I was trading also USD JPY. So I'm going to, from next week, reinstate the USD JPY. So here's the first one. So on the first one, guys, this is what's going to do. First step is that for trade confirmation, this is trade confirmations. So first step is the daily bias check. So what I'm going to do is that I'm going to check for the market's daily bias. Is the bias bullish or is the bias bearish? So what you do is that if the candle, or let's say I take the highest of the previous time frame of the previous daily candle, and the lowest point of the previous candle. So what I do is that if there is a break above, let's say there is a break above, and then on the previous time frame, right, on the previous candle's time frame, let's say the market breaks above and closes with the body candle close, that means it doesn't reject off it, then it's giving a buy bias. But what I will do is that I will take that previous first thing is mark out the previous candle, and then after marking out the high and the low, then the second is you go to the lower time frame, the 4 hour or the 1 hour. Then you see if the market passes above the high of yesterday, the previous high, then it closes with a candle close. That means that it's likely to go up. And if it breaks towards the downside and it closes with the body candle close, then it means it's likely to go down. That's how you analyze your bias. So now let's move on to number 2. Number two is the trend bias check. So the trend bias check is that you will go to your higher time frame. I like to use the 4 hours for trend bias check. Then you mark out where is the trend going. This is we usually use the moving average lines, so your line down and the line towards the upside. Remember guys, this is not areas of where I trade. Simply this is me determining where is the market going. I don't trade using the trend lines. I just determine where the market is going using those trend lines. So that's where you should understand. That's why I'm saying trend bias check. Nah? And then number three is the higher time frame OB. It was supposed to be OB, higher time frame order block or fair value gap takes priority. What does that mean is that the higher time frame order block or a fair value gap is the one that determines whether the market is shifting towards the upside or towards the downside. Né? So what I do is that I only trade when it reaches those sensitive areas on the higher time frame, not just on the lower time frames and stuff like that. Trust me, you will get caught up in a wrong trade more if you don't rely on the higher time frames. So this is just a multi-time frame analysis, right? So number 4 is that I will check that is liquidity taken. Guys, liquidity must be taken. It's important for liquidity to be taken in order for you to confirm a trade, maybe a changing trade, something like that. Né? If liquidity is not taken, then you are the liquidity. That's what you should know. If liquidity is not taken, you are the liquidity. So after the liquidity has been taken, then I can confirm that my bias is likely now to work out. So number 5 is that change of character at lower time frame. So once the market has reached my order block on the higher time frame, and then after it has reached it, and then it starts changing character on the lower time frame from between 1 minute to 5 minutes, it's showing a change of character. That is where I start confirming my entries, right? And then let's go to number 6. So number 6 is entry at the nearest lower time frame order block or fair value gap. So what does that mean, guys? This means that now let's say the market goes down, goes a bit up, and then it changes character, right? Changes character on the smaller time frame. For you, the YouTube guys, there will be an example over here, and for the TikTok, you guys will see. Okay, so so that's what you do, né? You confirm with the lower time frame, change of character, then your entry will be at the nearest OP or fair value gap. So why the nearest one is because, guys, you should not wait for the market to go to the lowest of the lowest order block or fair value gaps for you to confirm that it's a buy, sometimes, or a sell. Sometimes the market doesn't have time to go to the lowest. It has already grabbed liquidity. What are you looking for? Put your order at the nearest fair value gap or order block, and then the last important one is your number 7 is your sell order, your stop loss, right? Your stop loss. So your stop loss should be recommended at the higher time frame, below the higher time frame order block or fair value gap. I repeat, your stop loss should be below the higher time frame order block or fair value gap, because that's actually when the trade becomes invalid. Otherwise, without that, then the trade is still valid. It's just that you, because of you wanted to trade the smaller time frames, now you put the order block, you put your stop loss too tight, and then you get out, and then the market continues your direction. So make sure that you do that, né? So after doing that, take 2 or 3 trades. So when you take 2 or 3 trades, what you're doing is that you will be able to secure your positions. What do I mean by that is that once the market starts moving towards your direction, and then it hits TP1, which TP1 it's at the nearest high or nearest sensitive area, then once it reaches that TP and it hits it, you will move your SL to entry. Then in that case you are secured. Even if the market wishes to reject, you are secured. You have secured one trade, and then also it will cancel the other entry on the entry level, and then if it wishes to continue up, then it will continue up. That's how simple it is. So yes guys, this is what I'm going to be also implementing from Monday next week. This was just an update on how things are going, but also I'm going to upload another video on Sunday. That video on Sunday will show you guys that how I trade. So it will show you exactly all the steps that I just said, and then it will sort of be me analyzing using the steps that I just showed you guys, so that I can show you how what I'm saying is applied. So yes, now only thing that you can do for me guys is to subscribe to the video, like and comment and share guys to your people and stuff like that. So I will see you on another video Sunday, so you can turn on the notification bells so that you can see exactly how I trade. So I'll see you guys on the other video. Shout out.